What are the major differences between the stock market and the Forex market? That's what we're going to dive into on today's video. Hey YouTubes, this is Brian here with IronWireLegacy.com. But before we get started, make sure you go ahead and thumbs up this video, subscribe, and make sure you click that bell so you can receive notifications when I drop new valuable content for you guys. In today's video, we're going to discuss the major differences between the stock market and the Forex market. Many more people have heard of the stock market, but most likely, most people are even unfamiliar with what the Forex market even really is. It wasn't until a few years ago that I found out myself. But one of the major differences in stocks is the New York Stock Exchange. What you're doing is you're purchasing shares of a particular company. And if the valuation of that company rises, that stock price rises, you make a little bit of money. And the reason why I say a little bit of money is because at the end of the day, if you bought stock in Facebook, for instance, you might have made a little bit of money when the stock price rose. But at the end of the day, Mark Zuckerberg, the CEO of Facebook, is still the billionaire. It's just facts. And one of the major differences when you compare that to Forex is Forex is the buying and selling of different countries' currency, like the US dollar, the Japanese yen, the Great British pound, the euro, Mexican peso, Canadian dollar. There's numerous different currencies for each individual country. For instance, have you ever traveled outside of the country? When you went into the airport, one of the major things you see in any airport, any international airport across the world, is a currency exchange office where you can go and take your currency. If you're traveling outside of the country, you take your currency and say, hey, I want to exchange this, let's just say $1,000 to euros. And they will give you a certain amount of euros. And let's just say I travel over to Europe and I stay there, or London, I stay there for, a week. And I don't spend any of my money. And I've got friends there that actually do, they say, hey, I've got everything for you, Brian. They take care of everything. I get back to the United States. I can't, use those euros here in the United States. I've got to transfer them back to US dollars. So I go into the exchange office, the currency exchange office in the airport. And guess what? When I exchange that money back, I'm not going to get $1,000. 9 times out of 10, it might have rose or dropped a little bit. So I might get 1,100, 1,200. I might get 800, 600, just depending on where the exchange rate is between those two currencies. And those things change every single millisecond. That's how simple it is to make money in Forex. But the good thing about it is you don't have to, travel across the country to accommodate this. You can actually do it from your smartphone. You can actually do it from your laptop. Anywhere around the world, wherever you have internet access. Another major difference is the trading volume. The trading volume with the stock market, I think, is about 200 billion per day. The Forex market, on the other hand, trades over $6 trillion per day. That is the largest and most liquid financial market anywhere on earth. So that's one of the things I love about it. Another thing is when you compare stocks to Forex, with the stock market, it's only best when the price is rising of the stock. But when the stock price starts to fall, something happens, some sort of news event comes out about that particular company and their price falls. Typically, you're losing money when you're investing in the stock market. Most people have the 401k investing in for stock market, things of that nature. But if you lose your job, guess what? You're no longer participating. Another thing is the Forex market, you can make money in any economic situation. It's pretty much been known as the only recession-proof industry. I love that fact because there's been times in our history where we've had the Great Depression, we've had the financial crisis of 2008. What's going on right now in the world and what's to come? Because I feel like what's happening right now is just the beginning of what's to come. And it's going to get a lot worse before it gets better. A lot worse before it gets better. And if you've been paying attention to the news, you can actually kind of see where these things are heading. If you read articles and things like that, news articles, you can see what some of these experts are saying. This country is going into a not recession, because we're in that right now. We're going into another depression, like the Great Depression. And guys, it's not going to be a nice situation for a lot of people worldwide. But another key difference between the stock market and Forex market is because stock market, you got an opening bell and a closing bell, 8 a.m., 5 p.m., Monday through Friday on Eastern Standard Time. In the Forex market, when it opens on Sunday at 5 p.m. Eastern, it trades 24 hours a day, around the clock, all the way up until Friday at 5 p.m. Eastern. That's 24 hours a day for 5.5 days that you can trade, London session, Asian session, you can trade New York session, whatever your heart's desire is, you can accomplish those goals. No matter what your work schedule, whatever your daily goals or your daily life entails, Forex market works around your schedule. Whereas stock market, you got that 8 to 5. That's it. Now, there's thousands upon thousands of different companies that you have in the stock market. Just the New York Stock Exchange, there's over 2,800. On NASDAQ, there's well over 3,000 plus. That's a lot of different companies to be paying attention to. Whereas in the Forex market, there's seven major currency pairs that people like to trade. 7 majors. That's a whole lot less. And I like that. Another thing is leverage. When you're talking about the leverage of Forex versus stocks, at the most, you're going to have 2-to-1 leverage. In the Forex market, you can see 50-to-1 leverage. You can see 200-to-1 leverage, 500-to-1 leverage. You can even see, I've seen sometimes 1,000-to-1 leverage when it comes to Forex trading. So most times in stock trading, you have to have lots and lots and lots of starting capital, most times thousands of dollars. And in the Forex market, it's a lower barrier of entry because some of these brokers out here will actually let you open up a broker account for $100, some even for $10. And it allows the average person to be able to grow. Once you learn this skill set or utilizing technology like I am to make it simple for you, make it easy for you, but it allows the average person to be able to take a relatively small amount of money and grow that over time. So, guys, this is Brian here with INYLegacy.com. I hope you got some tremendous value and education from the big differences between the stock market versus the Forex market, so we can kind of enlighten you and educate you. And guys, as I talked about briefly about that artificial intelligence I'm using, guys, if you want to know more about that, go to the link in the description. Make sure you thumbs up this video, comment, share it if you got value, and most definitely ring that bell when you subscribe so you can be notified when I go live again. I'll talk to you on the next video.